If you have ever had money just sitting idle in your savings account and wondered whether you should really be doing something more productive with it to help it grow for your future security and dreams, then this video has been created exactly for you. Bob knows this feeling very well and is excited to guide you through every single step. Perhaps you have asked yourself if $5,000 is truly enough money to begin investing seriously, or if you need to save much more before it becomes worthwhile to start your financial journey. Bob has wondered the exact same thing many times and wants to remove all those doubts for you right now. What if the entire market crashes tomorrow right after you invest and you lose everything you worked so hard to save? This terrifying thought stops so many people, including Bob, from ever taking the first step with their money. In this video, Bob is going to answer every single one of these common worries step by step, starting from absolute zero so you feel completely confident. He will explain exactly what ETFs are, how to choose the right ones, and how you can build a real portfolio today. An ETF, short for Exchange Traded Fund, is basically just a basket filled with hundreds or even thousands of different companies all at once instead of owning just one single business. One simple purchase gives you instant diversification across many sectors. If one company inside the basket has a bad year, the rest of the companies carry it forward, so your overall investment stays much more stable. Bob loves this idea because it protects his money without any extra effort on his part. A single stock is ownership in just one company, so if that business struggles, you feel every single bit of the loss. Bob prefers the basket approach because it spreads the risk and gives him peace of mind every single day. A mutual fund is also a basket, but someone else is actively managing it and charging high fees whether the fund performs well or not. Bob realized those fees can become extremely expensive over many decades of investing. ETFs split the difference perfectly because they track an index automatically with almost no management involved. The expense ratio stays incredibly low, between 0.03 and 0.3% every year. That tiny expense ratio number is the very first thing Bob always checks before buying any fund, because it is taken out of his investment every single year, no matter what the market does. The second important filter Bob uses is understanding exactly what the ETF actually owns underneath the marketing name. He wants to know the underlying index and all the companies inside it. The third filter is a proven track record across many market cycles, including crashes and recoveries. Bob looks for funds that have survived real difficult times and come back stronger every time. Those three simple filters, expense ratio under 0.2%, knowing exactly what it tracks, and a long proven track record, are exactly what Bob uses to build every portfolio he recommends. This starter portfolio uses only 3 carefully chosen ETFs, each with its own specific job inside the overall plan. Bob explains every single reason behind his choices so you understand completely. The first fund is VO, the Vanguard S&P 500 ETF that owns the 500 largest companies in the United States, all at once giving Bob instant exposure to the strongest American businesses. The second fund is QQQ, the Invesco Nasdaq 100 ETF, focused heavily on innovative technology companies that have historically delivered faster growth over long periods. The third fund is VXUS, the Vanguard Total International Stock ETF that owns more than 8,000 companies across the entire world outside America for true geographic balance. Bob allocates half of his $5,000 to VO for stability, 30% to QQQ for acceleration, and the remaining 20% to VXUS for worldwide balance. This combination creates a blended dividend yield and an average annual appreciation of 13.64% that will do the heavy lifting over the next 30 years. Once the ETFs are chosen, the actual buying process is surprisingly simple, and Bob walks you through every single step so you can do it yourself in just a few minutes. Once the ETFs are chosen, the actual buying process is surprisingly simple, and Bob walks you through every single step so you can do it yourself in just a few minutes. Searching the ticker symbols, entering the dollar amounts, and confirming the purchase takes less than 5 minutes per fund, and fractional shares let you start with any amount you have. After buying the ETFs, the most important thing Bob does is absolutely nothing, because checking the portfolio every day or reacting to news is the most expensive mistake investors make. Bob holds through every single market drop, because history shows every major downturn has always been followed by a strong recovery for those who stay invested. Once a year, Bob reviews the portfolio and rebalances only if the allocations have drifted significantly, bringing everything back to the original plan he built. After 10 years of doing absolutely nothing except letting the portfolio work, Bob's original $5,000 has grown to almost $20,000 thanks to steady compounding. By year 20, the portfolio reaches over $73,000, and Bob is amazed that his single decision years earlier continues to create such impressive results. After 30 years, the starter portfolio grows to $268,954 from that single $5,000 investment with no additional money added. For the aggressive growth portfolio, Bob removes VXUS completely and adds VGT, the Vanguard Information Technology ETF, to push the long-term growth even higher. He also changes the allocation slightly to 40% in VO30, 5% in QQQ, and 25% in VGT to match the higher risk and higher reward profile. The same $5,000 now grows to over $640,000 after 30 years because of the extra technology concentration and higher blended appreciation rate. The gap between the two portfolios after 30 years is more than $370,000 from exactly the same starting amount and timeline. Bob reminds you that the aggressive version is not for everyone, and you should only choose it if you have a genuine long timeline and can handle bigger drops along the way. Now you have everything you need to get started today with confidence. Bob hopes this video has removed all your fears and shown you exactly how simple and powerful investing can be. In the first year after investing his $5,000 once, Bob's starter portfolio grows to $5,745. It may not look impressive yet, but this is where the magic of compounding quietly begins its long journey. Many beginners get discouraged after the first 12 months because the growth seems slow. Bob wants you to understand that year one is just the foundation and the real acceleration comes later through the power of time. After 10 full years with no additional contributions, Bob's $5,000 has grown to $19,529, almost 4 times the original amount thanks to steady compounding at work. By year 20, the portfolio reaches $73,239. The same money that took 10 years to nearly quadruple now grows even faster as compounding builds serious momentum over time. At the end of 30 years, Bob's starter portfolio is worth $268,954 from that single $5,000 investment. Capital appreciation did most of the heavy lifting. Automatic dividend reinvestment added another $6,024 on top. Those dividends quietly bought more shares every quarter for 30 years without Bob ever touching the account. For the aggressive growth portfolio, Bob completely replaces VXUS with VGT, the Vanguard Information Technology ETF that focuses purely on over 300 US technology companies for maximum long-term growth. He also shifts the allocations to 40% in VO, 35% in QQQ, and 25% in VGT to match the higher risk profile and push for stronger overall returns. This aggressive portfolio has a blended average annual appreciation of 17.35%, significantly higher than the starter version because of the heavier technology focus. After 10 years, the aggressive portfolio reaches $25,716 compared to only $19,529 in the starter portfolio. Already a clear difference. By year 20, the aggressive version grows to $128,850, nearly double what the original starter portfolio achieved at the same point in time. After 30 years, the aggressive growth portfolio reaches $640,410 from the exact same $5,000 starting point, creating an impressive gap of over $370,000. The big difference between the two portfolios comes down to how much risk Bob is willing to accept. More technology concentration means higher potential returns, but also bigger drops during market corrections. If you prefer lower volatility and steady growth, the original starter portfolio with VXUS is probably the better choice for most people, including many versions of Bob himself. The starter portfolio already delivers excellent long-term results with good geographic diversification and much less dramatic swings when technology sectors have difficult years. Even if you cannot start with $5,000 right now, you can begin with much smaller amounts. Bob wants to show you how investing just $1 per day can also build real wealth over time. Using 5 low-cost Fidelity index funds and investing only $1 every single day creates another powerful path to building serious money through consistent small contribution. The most important step is simply getting started today, no matter how small the amount feels. Every successful investor began exactly where you are right now with that first contribution. Bob believes that the best time to start investing was yesterday, but the second best time is right now. Taking action today puts the power of compounding on your side for decades to come. Remember that you do not need to be perfect. You just need to be consistent and patient. Bob's portfolios prove that simple strategies executed over long periods create incredible results. The biggest mistake most people make is waiting for the perfect moment or the perfect amount of money. Bob learned that starting with whatever you have available is always better than waiting. With the right low-cost ETFs, automatic dividend reinvestment, and the discipline to simply hold for the long term, your money can work much harder than you ever imagined possible. You now know exactly what ETFs are, how to choose them using the 3 important filters, and how to build and maintain a simple yet powerful portfolio with just $5,000. The entire process, from opening a brokerage account to buying your first ETFs and then simply letting them grow, is much easier than most people think once you understand the steps. Bob wants you to invest with both your head and your heart, understanding the numbers while staying calm when markets move up and down as they always will. Geographic diversification through international stocks helps protect your portfolio when the US market faces challenges, which it will at some point in the future. Market drops are completely normal and have happened many times throughout history. The investors who succeed are the ones who stay invested instead of selling in panic. Turning on automatic dividend reinvestment is one of the smartest free things you can do because it allows your money to compound continuously without any extra work from you. Checking your portfolio only once a year and rebalancing when necessary keeps you disciplined and prevents emotional decisions that can hurt your long-term results. Choose the portfolio that matches your personal comfort with risk and your time horizon. Both options can create meaningful wealth if you remain patient and consistent. Even starting with $5,000 or less can lead to hundreds of thousands of dollars over 30 years when you let compounding do its incredible work. Bob is incredibly excited for you because he knows that taking this first step today can completely change your financial future in ways you may not fully realize yet. 30 years may sound like a long time, but it passes faster than you think, and the rewards of starting early are truly life-changing for those who stay committed. Always remember Bob's 3 simple filters: low expense ratio, clear understanding of what the ETF owns, and a long proven track record through multiple market cycles. These 3 ETFs work together beautifully. VO provides stability, QQQ adds acceleration, and VXUS brings important international balance to the overall portfolio. Never try to time the market or chase the hottest fund of the moment. Bob's simple buy and hold strategy has proven far more effective over decades. The real treasure in investing is not found in complicated strategies, but in patience, low costs, and the unstoppable power of compound interest working for you. You have all the information you need right now to take control of your financial future. Bob believes in you and knows you can do this successfully. Starting small today is infinitely better than waiting for the perfect large amount that may never come. Every journey begins with that very first step. Open your brokerage account, transfer your money, buy the ETFs according to the allocation, and turn on automatic dividend reinvestment. That is literally all you need to do. When the market drops, and it will, remember that these temporary declines have always been followed by new highs for patient long-term investors who refuse to sell. Time is your greatest ally in investing. The longer you let your money work, the more powerful the results become through the miracle of compounding. Whether you choose the balanced starter portfolio or the more aggressive technology-focused version, both can help you build substantial wealth if you stay disciplined. Give yourself credit for learning about investing and taking responsibility for your financial future. Bob knows this knowledge will serve you well for many years to come. The blended appreciation rate of 13 to 17% may not sound dramatic year by year, but over 30 years, it creates truly life-changing amounts of money. Simple investing done consistently beats complicated strategies almost every single time. Bob prefers keeping things straightforward so he can actually stick with the plan. Watching your money grow through compounding feels almost magical after many years. But it is simply mathematics working silently in your favor every single day. Your future self will thank you enormously for the decision you make today to start investing, even if the beginning amount feels small right now. Diversification across different sectors and geographies acts like a financial shield that helps protect your portfolio when certain markets face temporary difficulties. Low expense ratios may seem boring, but they are one of the most powerful factors in determining how much money you actually keep after many decades of investing. The road to financial independence is built one consistent step at a time. Bob's portfolios show exactly how that journey can unfold when you remain patient. Here is to your financial success and to the freedom that comes from understanding how simple long-term investing can truly transform your life over time. If you want to see what happens when you invest just $1 a day using 5 different low-cost Fidelity index funds, the bonus video is ready for you right now. Thank you for watching and for taking the time to learn these important lessons about building wealth the smart and simple way with ETFs. Bob genuinely hopes this video has answered all your questions and given you the confidence to finally start investing your money instead of leaving it sitting idle. Bob genuinely hopes this video has answered all your questions and given you the confidence to finally start investing your money instead of leaving it sitting idle.